Meantime, oil and gas ETF ticker XOP breaking a 4-day win streak, coming off its worst daily performance, in fact, since the beginning of August. Our next guest, though, just reaffirmed his company's guidance in the industry at the Barclays Energy Power Conference. Baker Hughes CEO Lorenzo Simonelli joins us now at Post 9. What a treat. It's good to have you.
Good to be here, Sarah. Nice to see you, Carl.
So what are you seeing broadly in the business, and how tied is it to the price of oil and gas?
It's an exciting time to be in the energy space, and I think you've got to look at it from both the short-term perspective as well as the medium and long-term. As you look at the long-term, we know that energy demand is increasing, and a company like ourselves that's focused on energy and industrial technology is very well positioned to meet the equipment demand, the services demand that's going to be there. Obviously, short-term, there's the volatility that you see from what's happening to WTI, what's happening to Brent. You've got the OPEC barrels that are coming online, and that's got to sort itself out over the course of the back half of this year, beginning of next year. And that's what you're seeing from a weakness perspective. Baker Hughes, though, is much more of a longer cycle company and much more focused on the technology and the equipment that's provided to areas such as LNG, power generation, the increasing data center boom that we're seeing now. And so we're feeling very good about the future.
I mean, today's a good example. Stocks up 2%, oil prices are down. And we were talking about in the break how your strategy has been to insulate yourself from the boom bust nature of, I guess, the energy market through diversifying into more technology.
Really diversifying and going into more stable and areas that can create value in the future, moving away from some of the secular cyclical trends and really staying focused on production areas such as chemicals, artificial lift, looking at the areas of turbines as you look at compression, you look at LNG, and these are areas that have macro tailwinds as you look at the increasing demand that's there for energy, not just here in the US, also internationally. And there is this, I think, understanding and appreciation now that you need energy expansion globally, and that's providing prosperity, affordable, secure, reliable energy going forward.
You mentioned the data center boom and the power we're all going to need. How do you explain the role that gas will play versus, because we're throwing so much else at it too, trying to get nuclear off the ground, right? And some renewables, I guess, to some degree. But you think gas will be the tip of the spear on that front?
I think we're in the age of gas, and I think it is a resource that is available in abundance. It is also very useful, and as we go forward, it will be a greater part of the energy mix. And I think as you hear also the opportunity of LNG and LNG exports, and natural gas is one of the key focus areas for us at Baker Hughes. We're more a natural gas than we are an oil company from a standpoint of the services and technology we provide.
This is our first time talking to you since the big acquisition.
Yes.
More than $9 billion for Chart. I think it was the biggest acquisition in the oil services sector since your own deal back for GE. So tell us what the strategy is here.
We're very pleased with the announcement, and again, Chart is just a stepping stone in the continued evolution of Baker Hughes, coming off the portfolio optimization actions that we also announced in the second quarter. And Chart allows us to, again, further provide equipment and services to areas for our customers in the energy space, as well as continue to diversify into other industrial sectors. And they're uniquely positioned with the capabilities they have around heat transfer, heat exchangers, what they have from a cryogenic tank perspective. And it's very complementary and really provides us a broader access to the products and equipment and services that we need to serve our customers and the end markets.
Is AI playing a role in this industry?
It is from a productivity perspective and efficiency. And I think, you can look at the rig count. A lot of people always look at the rig count.
Every Friday, we love it.
And then you look at also what's happening from a production standpoint. The reality is there is a disconnect at times because production is driven by efficiencies. It's also driven by the digital capabilities you're able to enhance within the actual marketplace. So we've got digital solutions that are increasing the uptime of our equipment. You're able to anticipate, predict downtime, avoid that downtime, and so you're getting efficiency without needing to add more rigs. You're still getting the same production and likewise on the equipment that we provide.
You think we ever get back to the old highs of operating rigs?
I don't think you get back to the old highs. I think you've got a new normal that's going to continue to evolve as new technology is at the forefront, and also rigs have become more productive within themselves as well.
What about the data center part of the business? How big is that for you?
So we've said that over the course of 1 to 3 years, we expected orders of $1.5 billion. We've already announced first half of this year, $650 million worth of orders. We've got 1.2 gigawatts of turbines that we're providing the marketplace. And we see it as not just a one-year phenomenon. This is a growing trend. And you can see from the number of chips that are going to be produced for data centers, this is going to be not just a U.S. phenomena, but also globally. And we've got a lot of activity in the Middle East as well.
Is it competitive, or is it just the pie is just so big?
Right now, it's really an aspect. People need power.
Yeah.
And so we are seeing a lot of interest in our really smaller turbines as you go to 16 megawatt and distributed power generation off the grid, because you need certainty of being able to provide the energy. And that's where natural gas comes in, as well as in the future other fuel mixes as well.